Good evening, good morning, good afternoon, whatever time it is for you out there. Welcome to my video on my trade recap from this morning. I'm going to be going over what I was watching and the trade I ultimately did take and the one that I sadly missed out on. So without further ado, let's get right into this. This morning I was watching Nvidia, Starbucks, and Googl with an L. Googl was there are two Googles. Right now I'm trading the one ending in L. Not much of a difference in the two. Just the one with the L is a Class A and the other one isn't. But the point is moot. So this morning I wasn't really seeing much that I like setting up until right about here, right about 9:45 on Starbucks. It looked like it put in a bottom right at a $0.50, 68.50, and from tracking Starbucks over the past few weeks, I've come to realize that Starbucks does respect whole and half numbers, and my trade plan this morning was if there was a dip at the open, I was going to watch 69 and then 68.50 to hold as support. 69 kind of blew right through. So when I saw it kind of starting to flatten out and bottom a little bit here at 68.50, I noticed that the SPY was starting to come back up. So at that point, I decided to take a position in Starbucks call options right here. And what I did was purchase the 69 calls expiring at the end of this week. I did purchase 20 calls, which it sounds like a lot, but it's actually a very small position. It's only a $620 position. So very small position, small risk. My risk on this was $62. It's a 10% risk on this. And I wanted to, see where this was going to go. As I'm still kind of new to the option side of things. I've been trading equities for some time now, but I'm still getting my feet wet, so to speak. If you want to use that water analogy, I'm not in up to my toes. I'm into my knees at this point in options. I'm still getting the hang of things. Still have my little rubber swims on my arms, if you want to go with that analogy. But I'm getting the hang of it, and I figured I would take 20 calls here because, like I said, it's a $620 investment with a $62 risk, and I want to have enough skin in the game where it's gonna matter. And the emotions are going to be there. If I took 5 contracts, that's... I can't do math right now. 5 contracts would have been nothing. This is what I risk on a trade. So, I wanted to have a little bit of skin in the game and to have a little bit of emotion to really see how I'm handling it, how I'm progressing, where I'm messing up, and what I need to improve on emotionally and psychologically. So I went in with the 20 contracts. I basically bottom ticked this. My entry on the equity side, it was right around 53, and the bottom was 50. So if this was an equity trade, my risk would have been 3 cents plus, I probably would have given it another, I don't know, dime. So maybe I would have had 13 cents of risk at the most on the equity side, maybe not even, maybe a dime. But anyway, so I bought in here, and it's funny here. I'm looking at the options chart, and you can actually see my entry kind of. This little spike in volume right here. This was 42 contracts total, and I bought 20 of these. So you can kind of see me getting in right here. So in any event, as this started coming up, it was the P&L was growing nicely, and I'm not one that really monitors my P&L, but I kind of have to have it up with the options for now because of how quickly things can turn, as opposed to an equity. On a pullback like this, which I'll get to in a moment, on the equity side, I wouldn't bat an eye to hold through this, but because this was an option, what happened on this play here is I got in here nearly bottom ticking it. When it came up to the VWAP and looked like it started to reject it, put in this seller's candle right here, then it put in this big red candle here, tested the 20 EMA on the 1-minute chart. The SPY looked like it came into the downtrend line and was starting to roll, so I covered the entire position here. I sold all 20 calls right here, and it wasn't a total loss. I still was able to make 88 and change on the trade today. It's a little bit less than I wanted to make. I was hoping to take home a couple $100 on this trade, But hey, it's, it's $88 that's in my pocket that I didn't have yesterday. So always got to have the right outlook on it, and always just keep in mind that it's not always about the P&L. Yes, we do this for the money. Ultimately is the goal, but you have to get the process down first. You have to know what you're doing. You have to get it right and be consistent first, and the money will follow. In a year's time from now, or 6 months, or whatever it takes me to really get the options down, instead of 20 contracts, this could be 200 contracts, and this would have been $888 instead of only 88. But moving on from that, that was the trade that I did take here, and needless to say, if I did hold on to it, this would have actually, from my entry down here to highs, would have been almost 100% trade. So $620 position. If I held the entire way, I would have made about 620, but I probably would have scaled out here and scaled out here. Scaling out along the way, it still would have been about a $400 trade, and still would have been very, very nice for the day. Would have been way more than my quote-unquote daily nut goal for the time being. Now I want to talk about the other trade that kind of, I'm just going to be honest, it kind of pissed me off. I'm upset at myself that I missed it, but the reason why I missed it is because I was in this trade. I was managing this trade here in Sbux, and then the one in Googl happened that really it just ticked me off. I had to get up and walk away for a minute because I was a little pissed. And when I go over the trade, you'll see why I was a little pissed about this. But, you can't catch everything, and things happen, so you have to just understand that's part of trading. And at the end of the day, I put on a good trade in Sbux. It was a green day, and, this, I think, is the 4th or 5th green day, knock wood, that I put in so far. So just got to keep positive and keep thinking about the positives, and knowing that this is, as cliche as it sounds, this is a marathon, not a race, and those bigger days will come, and the consistency will come, and everything will come. Just a matter of working hard at it and sticking to it. Enough on that. Let me get over to Googl with an L, and I was looking at the 1135s. If you look here on the daily chart, you see I have my levels lined up. The thicker levels here are the more significant levels, the ones I had down as price targets. This yellow here is the 200 SMA. This blue here is the 9 EMA. My ultimate target was the 200 SMA on this trade. To be quite honest, I didn't think it was going to move this far today. I didn't think it was going to come all the way down and almost test the 9 EMA on the daily. That was a bit, when I saw this later in the day, I was a bit surprised to see it come down this far. So the trade that I missed was this perfect VWAP tag right here. Give a quick pop in the morning, right into a trend line, right into a daily resistance level, right into almost pre-market highs, right into other pre-market levels right here. Rejected, sold, and actually bounced right off this daily level of 1142.34, came back up, tagged the VWAP, and then from there it was game on if you were in this trade. It was a wonderful trade. What I was looking at here was the 1135 calls, and I was only going to take 3. So 3 calls here would have been a $5,200 investment. That would have been a $525 risk, which I was well aware of, but I was looking for at least a 3-to-1 on this trade, knowing how Googl moves as far as a percentage gain that the options can put out. And as you can see, these calls today were absolutely on fire. I mean, 300, 400, 500% returns on some of these calls here. And needless to say, if I did take my 3 contracts right here, taking profit where I intended to according to my trade plan, my first profit target would have been this 1135 area, and this 20 EMA would have kept me in the trade the whole time because it never even came close to breaking it until it bottomed here and started coming back up, and that's where I would have taken my first contract off. And then I would have actually let this ride a little bit and see what happens, because my target was my ultimate target was the 200 SMA on the daily, which it did come right down to. And this is where I would have taken my second contract off, And then from there, I would have been in the driver's seat from a P&L standpoint. So I would have let the third contract ride. And I would have seen where that would have gone. If it would have came back up strong and broken through this 1135, tested the VWAP, I probably would have taken it off. But it in fact did come down pretty much and test the 9 EMA, which, like I said earlier, was a shock to me. So, you know, the curiosity in me, I did do the math on this, and this would have been an $11,000 plus trade. So that's what got me bummed. You know, where I made a nice proper trade for almost $90, and I could have had a trade for 11,000, you know, in the bank today, which I had on my watch list, and I just happened to miss it because I was in a different play. And, you know, it's something that I just need to start becoming more accepting of, and I know it's one of my mental faults that, you know, I just feel like I'm wrong because I picked the quote-unquote wrong stock. I was in the wrong stock. I should have been in Googl when instead I was in Sbux. And, you know, I know that's not the proper mentality, and I just have to keep with it every day and working on not having that mentality. And, you know, and that's really what it comes down to. And it comes down to that, and it comes down to my rules. There were a number of instances today where I said to myself, you know, I really wanted to be in this trade. I knew the potential of this trade. Let me just take a chase entry. Let me take 1 or 2 contracts and see what happens, knowing that my ultimate first target was this 1135 area, and my next target down was the 200 SMA. But I said to myself, nope, that goes against my rules. I am not breaking my rules. And it happens sometimes when you follow your rules to the T and you have that self-discipline, your rules end up biting you in the ass, which I could have taken a chase entry on this and still would have made it very nicely. But I thought about it, and the more I thought about it, the more I said, if I chase this and it ends up being a winner, I'm going to be rewarded with a positive outcome on a bad trade, and that's not what I want. I don't want to instill that in my brain. I don't want my subconscious to see that action, to start being okay with just because the trade is green doesn't mean it's good. And I don't want to have that mentality. You know, if it's a good trade because I followed my rules and I followed the technicals and I did the right thing and I'm green, then it's a great trade. And even if it's a red trade, if I follow my rules and respected my stops and it's a small loser, then it was a good trade. But, you know, I think a lot of us end up in trades that we shouldn't be in, or end up getting lucky, and we think they're good trades and they're not. And, you know, that's part of why I have my rules in place, and I hold myself to a high standard of self-discipline and following those rules because, you know, yes, it did kind of keep me from some nice gains today, but it's also going to keep me safe in the future. It's going to keep me from chasing plays I shouldn't be chasing. It's going to keep me from taking dumb trades. So that's the importance of having your trade plan, having your rules, and having the self-discipline to stick to those rules day in and day out. And I just wanted to touch on that briefly because I know there are a lot of you out there that are listening that might be new to this, might be just getting started. You might be 6 months or a year into it and you're still having trouble with maybe your psychology and maybe your rules, and I get that. Yeah, I'm in this for more than a year, and I mean, I've been trading for way more than a year, but I've been doing day trading for a year and a half. Maybe the past 10 months, quote unquote, properly, with the proper mentor and the proper teacher. But 10 months in under the proper guidance, and I'm still working on getting my head straight. You know, it's the hardest part, especially when coming from trading penny stocks, coming from other places that teach differently. It really messes with you mentally, messes with your head, messes with your psychology. And I know how to trade, and it's not a I'm not tooting my own horn. I'm saying I know how to trade. I know the technicals. I just have to each and every day make that effort to just improve a small bit mentally and emotionally, and you set the goal, you know, I'm not advocating setting the bar low. I love to set high goals, and I love to work toward achieving them. But if you only improve 1% a day, you've improved 365%, excuse me, in 1 year's time. You've improved 3.5 times from what you were a year ago, and that's an incredible improvement in anything that you undertake. So I just wanted to touch on that real briefly. And that's all I have for you tonight. So on that note, thanks for listening. If you like this video, please like it. Please subscribe. Please share it. And you have a great night, guys. Trade safe, and I'll catch you all later. Ciao.